Well, global share markets are off to a flyer in the first fortnight of 2023. The Australian market is up 5.2%, which is more than Wall Street's 4.1% and the world's 4.9%, but less than Europe's incredible 7.6% surge in just 2 weeks. Now, there are three basic reasons for all this. First, inflation is yesterday's story, so interest rates are expected to stop rising soon and start falling. Second, Europe's having a warm winter, so the energy crisis caused by Russia's invasion of Ukraine is not as bad as expected. And third, China has ditched its zero COVID policy and opened up the economy. Mind you, a lot of people are getting sick there, so that's not great for the economy either. So we'll see what happens there. As for the inflation story, well, this chart of money supply and inflation in the US, UK, Europe and Japan is instructive. Inflation is no longer seen as everywhere and always a monetary phenomenon, as Milton Friedman insisted, but to the extent that excess money helped produce last year's inflation, it isn't anymore. Today's rise by the All Ordinaries Index here was 0.9%, and one of the big movers today and for the year so far is Qantas. Its market value has hit an all-time high of close to $12 billion. Now, you might have thought that upsetting customers was a bad business strategy, but you'd be wrong, it seems. Gold is flirting with $2,000 US again, a year after it was last there, while oil and aluminium both went up over the weekend. And the Australian dollar is at 70 US cents again, because the US dollar has fallen 11% since last September in anticipation of an end to US rate rises and maybe a US recession. And that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.